Alan, good to have you back. So, have you seen the worst behind us then?
Well, we're hopeful, but we're cautiously hopeful. I think we, in the allocation strategies, we started reducing cutting our equity exposure back toward the end of the first quarter because we were concerned about the slowing momentum. But the combination of the good second quarter earnings and the emotional market sell-off made us think that there were some opportunities to get back in, and in fact we have been getting back into the markets. So there's still a lot of challenges out there in front of us, but we are encouraged by what we're seeing.
All right, so you're pretty optimistic then that we'll have the S&P 500 and the Dow finishing higher in the year?
Well, I would say that we have right now we're still sorting through a number of issues, but our fundamental work on valuation for the S&P 500 saw the market get down very close to some of our more downside estimates, and so that made us feel like getting involved made sense, at least to some degree. So I do think that we're going to see the market trending higher as we go into the fourth quarter. I don't think it's going to be a straight shot up. We still have too many issues to get through, but I do think the air is starting to clear gradually.
Okay, when you say issues, what are we talking about? It looks like the consumer may be back online considering the optimistic numbers that we got for last month. What are the biggest concerns for you going forward?
Well, the biggest concerns are mainly public sector related, whether we're talking about the problems in the EU or the problems here in the U.S. with the federal deficit. What I do see good that's going on is that companies are continuing to execute very well. The level of joblessness, while high, appears to be stable, and layoffs appear to have slowed. So what that says to me is that companies are executing very well. This is obviously a challenging environment. We're going to have some problems on the public sector front going into next year. But in terms of which assets to buy, we believe that equities are the better value right now.
Well, you know, some say that things are going to be pretty smooth until you get the next blow-up from the European Union, because that issue hasn't been solved. Your thoughts right now on the EU? There's some are saying if you don't get any bad news, that's good news for the markets.
Well, that's true, and we had some relatively good news with the merger announcement on 2 Greek banks, and we're hoping that that's going to help improve the overall capital position. But we are not, we don't believe for a second that the problems in the EU have been resolved, nor will be resolved over the very near term. They simply lack the structure to handle this on a more formal basis, and so it's going to take some courageous effort. But our sense is that there is a commitment to the EU and to the euro, and to that extent, we're expecting the leadership to work their way through that. Right now, we believe the economy is basically flying at treetop level, and so any turbulence at all will create market volatility. I think that's exactly what we've been seeing, but I do think the economy is moving in a positive direction.
Well, you know, Alan, over and over again, you keep hearing about from fund managers and also analysts saying the stocks are cheap. There's value to be found. How do you find value? It seems like everyone's going headlong into these dividend plays. Isn't that kind of a crowded right now strategy?
Well, at Ridgeworth, we'll look at it from the growth side and the value side. From the growth side, the stocks that we're looking for are companies that are continuing to generate good top-line growth, and a lot of those are multinationals that are generating that top-line sales growth on the international front. But a lot of them are doing it through market share growth. On the value side, we are seeing some deep value plays. Our mid-cap value manager has been buying into banks while they've been distressed. And so there are a variety of opportunities that we think out there, but all of it revolves on solid business plans, being able to execute on top-line sales growth, and being able to maintain margins. And quite frankly, the number of companies that are doing that is shrinking.